This is Alan Bush with the Daily Financial Forecast for Tuesday, December 20th. Starting out with the stock index futures, we are seeing prices higher today. This following much better equity markets in the Eurozone, with European equities now advancing to their best level in over a year. We continue to feel that even though the Fed did raise rates recently, that interest rates are still not high enough to reverse this bull market in stock index futures. So nothing changing in our outlook there. Look for continued strength through the balance of this year in the indices and further gains into next year. Now moving over to the currencies, seeing the dollar index advancing now to another new 14-year high. This as the probabilities of a rate increase from the Fed next year have increased. Also, we are seeing the euro currency lower, even though we did have stronger than expected inflation numbers in Germany and in the Eurozone in general. That normally would be bullish for the euro currency, but in this case, it was not, with the euro falling now to its lowest level since 2003. Also, the pound, another currency, ignoring some bullish news with retail sales coming in better than expected there. And the yen lower after the Bank of Japan concluded their two-day policy meeting and decided to continue with their economic stimulus plans. So the dollar index still appears to be headed higher as the Fed remains the only major central bank that is likely to raise interest rates next year. And in the interest rate futures markets, pressure, especially at the long end of the curve, as the probability of a rate increase next year increases, with the probability of a June rate increase now up to 75%. Yesterday it was 71%. So that putting some pressure on the longer end of the curve. Also in recent days, we have seen the bonds ignoring bullish news. It was just last Friday that we had the housing starts report coming in on the weak side, and yet bonds actually traded lower. So we are getting a variety of negative indications for the 30-year bonds, telling us that the trend still is lower. So look for more pressure in the bonds, and I think we can probably take out the most recent lows, which were 17-month lows, and the extended decline, I think, will continue well into next year for the 30-year Treasury bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.